All right, so Stacey, you are a chip analyst, so let's go right over to you and say just how much we've been talking for years about this. Is there anything that you can remember in your coverage universe in the time that you've been doing this that rivals the kind of catalysts that we are seeing right now with regard to this industry?
I mean, it's certainly probably more dynamic than it's ever been in my career. And even before Trump, the industry itself has become a lot more dynamic. It's become increasingly clear, not just functionally, but strategically how important it is. And then, I mean, with Trump in office, I mean, it's just fuel on the fire, because it's every day there's new stuff going on. And you have to remember, it makes it very difficult for my clients who are out there trying to invest in this environment. From a sell side perspective, from my own perspective, it's fantastic, right? All I need is interesting things to write and talk about. I've got no dearth of those. There's always something, every single day there's something new.
Stacey, if you've got Trump calling for CEO Lip-Bu Tan at Intel to resign immediately, one, what would that do to the company? Is there someone who could step into that shares? Could you see, we saw with Apple, as soon as it looked like there was going to be a more promising relationship between the company and Trump, shares popped. Could the same thing happen for Intel?
And look, I think it's clear, there's a lot of tech CEOs that have managed to build relationships with Trump. Intel and Lip-Bu Tan, they do not seem to be one of those. I mean, they were absent from Saudi Arabia. We haven't really seen him in public. Not that I like that sort of thing is necessary, by the way, but I mean, in this environment, I guess it is. And Intel really has not, at least outwardly, shown that they're doing that. And so, I saw the tweet or the truth or whatever you want to call it this morning. By the way, Lip-Bu's China activity is not a secret, right? He's been around for many, many years. He's involved in venture capital. His venture capital firm has had a lot of investments in China. None of this is news.
Yeah.
It's gotten attention before. It is getting attention now. And clearly in this environment with this administration, and to be clear, I don't think he's conflicted, but it's a bad look, right? And you couple that with the idea that he doesn't seem to have any kind of personal relationship. It's probably, even if Trump can't get rid of him, and I don't think Trump can, but it's probably not good to have the president of the United States painting a target on your back.
Christina, what do you think?
Amid relief at widespread exemptions from the proposed U.S. chip tariffs, NVIDIA's shares increased Thursday, along with the semiconductor industry as a whole. Early trading saw a 2.1% increase in NVIDIA shares to $183.06. On Wednesday, the stock increased by 0.7%. On Wednesday, President Donald Trump announced that he will impose a tax of about 100% on all semiconductors entering the United States, with the exception of businesses who have committed to producing their goods domestically. As a technological partner for the $500 billion Stargate project, which intends to construct new artificial intelligence data centers in the United States, NVIDIA is probably exempt from any taxes. The Taiwanese government also plans to exempt Taiwan's semiconductor manufacturing, its main supplier, from the tariff. NVIDIA chose not to respond. In most cases, the final electronics are imported rather than the semiconductors themselves, according to a research note published on Thursday by Vivek Arya, an analyst with BofA Securities. We anticipate little impact on the majority of end markets, even in this situation, given big electronics manufacturers like Apple, $600 billion total, and NVIDIA, $500 billion have also committed a strong U.S.-based manufacturing footprint. In morning trading, Broadcom was up 1.8%, and Advanced Micro Devices was up 3.5%, among other chip manufacturers. With artificial intelligence, AI, emerging as the technology of the future, NVIDIA became the first firm to be valued at over $4 trillion last month. Investors may be questioning whether the stock is too costly to purchase since it is currently trading just below its most recent record high on Thursday morning. Investors may feel more comfortable purchasing shares now if they examine how NVIDIA rose to the top of the AI market. The stock of NVIDIA does appear to be somewhat pricey at the moment. Based on projected revenue for 2025, its price-to-sales (PS) ratio is roughly 21.5. That is higher than its extremely high three-year average of 18.5. However, a high PS valuation has so far been validated. This is due to the fact that NVIDIA's data center segment has led to an exponential increase in sales. Alongside those sales, NVIDIA's stock price has increased, and both companies appear to have more room to grow. The company's next-generation graphics processing unit, GPU, the Rubin architecture, is expected to be released in 2026, and data center sales are still rising every quarter. Beyond data centers, NVIDIA has room to grow. As can be seen below, its automotive and robotics segment's revenue is likewise expanding rapidly. It can also have a longer growth trajectory. Globally, businesses are striving to bring autonomous automobiles to the masses. The market for self-driving taxis and ride-sharing might be enormous. To promote AI-driven autonomous vehicles, NVIDIA is collaborating with both established automakers and startups, such as Nuro, an autonomous driving firm. In addition to automotive applications, robotics may grow in popularity as businesses look for safer and more effective ways to run their operations. The future of NVIDIA appears bright. The stock might appear pricey right now, but if the company grows, that might quickly change. Since the start of 2023, when the artificial intelligence, AI revolution really began to pick up steam, NVIDIA's stock has increased by 1,100%. With a market valuation of $4.3 trillion, it is currently the biggest company in the world, but I believe there is still potential for growth in its shares. The most potent graphics processing units, GPUs, in the world are supplied by NVIDIA for use in data centers, which are now the benchmark for AI research. Among the chipmaker's biggest clients, tech behemoths like Alphabet and Meta Platforms recently informed shareholders that they intend to spend more on AI data center infrastructure this year than they had initially projected. On August 27th, NVIDIA is expected to make public its fiscal 2026 second quarter financial figures. Here's why I believe the news may spur further growth in the company's stock. When large language models, LLMs, began to gain popularity in 2023, NVIDIA's H100 GPU was the most popular data center chip for AI training and AI inference workloads. Although those LLMs were excellent at providing one-shot answers, which gave users a quick and easy way to access information, they occasionally provided incorrect information. The most recent AI models concentrate on reasoning, which entails spending more time working in the background to eliminate mistakes before producing answers. NVIDIA CEO Jensen Huang claims that new models need a lot more processing power since they need up to 1,000 times as many tokens as the previous one-shot LLMs. To provide that capability, NVIDIA created the Blackwell and Blackwell Ultra GPU architectures. It was predicted that Blackwell Ultra GPUs, such as the GB300, would begin appearing in the second half of 2025. In some configurations, these chips can perform up to 50 times better than the H100. Investors should anticipate a sales update in NVIDIA's next earnings announcement on August 27th, as the company's fiscal Q2 2026 encompassed July. Since many of NVIDIA's biggest clients are still increasing their expenditures on data center infrastructure, all indications point to skyrocketing demand. For example, Alphabet recently increased its capital expenditures, CapEx, estimate for 2025 from $75 billion to $85 billion. Although the business estimates it might spend up to $72 billion, Meta Platforms also raised the low end of its capital expenditure guidance from $64 billion to $66 billion. In contrast, Amazon spent $55.7 billion on capital expenditures in the first 2 quarters of 2025, and according to its guidance, it may spend an even more impressive $118 billion in the entire year. The majority of money will go into processors and infrastructure for AI data centers. According to NVIDIA's guidance, the company's total revenue in the second quarter of fiscal 2026 was around $45 billion, a 50% increase over the same period the previous year. If past quarters are any guide, the data center segment, led by GPU sales, probably accounted for about 90% of total revenue. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. According to Wall Street's consensus forecast, the company also produced earnings for the quarter of about $1 per share, a 47% increase from the previous year. Investors should pay close attention to this figure since it has the potential to affect NVIDIA's valuation and, consequently, the trajectory of its stock. Since management's prediction for the forthcoming fiscal 2026 third quarter is expected to include demand for the new Blackwell Ultra GPUs, Wall Street will also be watching it closely. Any figure above the $52 billion that analysts anticipate in revenue guidance might be extremely bullish for NVIDIA's shares. Since May 28th, when it released its financial results for the first quarter of fiscal 2026, NVIDIA's stock has increased by 33%. As long as the company's results meet or exceed expectations, I believe the Q2 report on August 27th will be another positive catalyst. As of this video, the price-to-earnings (PE) ratio of NVIDIA's stock is 60.1. It appears to be at fair value because it is exactly in line with its 10-year average. However, if we base the stock's valuation on the company's prospective future earnings, the situation appears to be entirely different. According to Wall Street, NVIDIA will make $4.30 per share overall in fiscal 2026, which puts its stock at a future PE ratio of just 43. That is, in order to keep the stock at its present PE ratio of 60.1, it would need to increase by 40% over the following 6 months. I believe NVIDIA will easily meet, if not surpass, expectations on Aug. 27. Because so many of its key clients have raised their capital expenditure projections for this year. Either of those outcomes will create the foundation for further growth in its stock going forward. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Yeah, I guess right now it's just there's a 100% tariff, but we take it with a grain of salt. As long as companies can prove that they will, or they're committing to spending and building on American soil, then they will be exempt. For example, you had Apple committing $600 billion. Keep in mind, back in 2021, Apple committed $430 billion. So there's some double counting there. A few months ago, NVIDIA said that they would spend $500 billion. A few years ago, Intel said $100 billion. So a lot of companies can throw out these headline numbers that are massive, and some have actually started to build, Intel being an example, Samsung, Micron, etc. But the question is the follow through. How many of them will actually follow through? And then how many of those companies will be exempt if they're even just spending just a few $1 million, let's say, here on American soil? So that is the bucket. And we even have some companies that have already delayed. Like I made a list. Maybe we can bring up that list. That I'm calling it a silicon setback. Several of these names, Samsung, Intel, SoftBank, even today saying that they're going to delay their Stargate contribution thus far. So the reason I'm bringing these names up is to take all of these headline numbers with a grain of salt because they are not concrete. Just like this 100% tariff from President Trump, we still need details as to which companies would be targeted. Is it only U.S.? Is it American? If you use TSMC Arizona, then are you exempt like AMD? So there's a lot of unanswered questions, and this is, I guess, the ongoing battle for chip analysts when they are trying to rate their stocks and trying to create models when you have to go back and forth.
Kevin, as we approach the close today, what are you keeping a close eye on?
Yeah, I think the first thing, if we kind of zoom out, look at the year-to-date chart for the S&P 500, we now have a little bit of an interesting development that's taking place here. Yesterday, we got a little bit optimistic. Obviously, a lot of the news. We had a really strong day. Today, we started off very strong, but we saw some weakness. You can see that with the candle right now. But what is also taking place is this kind of channel that is actually developing, and hopefully, we're able to stay within this channel for today. You do not want to see any further breakdown to the downside, especially 6,300, which we will talk about that in a second. And the reason why I bring that up, you can see this divergence here with the RSI, which we are making lower highs here. This kind of matches what we saw back in January. Look, we started seeing that flag. We were having this consolidation in these two different areas right here for a significant amount of time. And then we started seeing a breakdown. You do not want to start seeing these kind of channel lines taking place as we are not really kind of going anywhere. We've had a lot of optimism, a lot of news that's been priced in. But now you start to think to yourself, if you're a bull, is this a bull trap? Am I looking at all-time highs, and are we starting to see a little bit of a breakdown or a loss of momentum? RSI is telling you, yes, you are. This could also be a bear trap, though. This means that the shorts that are in the market may start looking at this situation and saying, hey, this kind of matches what we saw earlier this year. Could we be looking at a breakdown? And that could be the case as well. So it's kind of a 50-50 shot at this point. Market breadth is actually looking pretty good. We'll talk about volume here in a second, but you don't really like to see this consolidation in this type of flag formation for too long because you get a little bit concerned if you're a bull that we might be breaking down as the RSI is kind of confirming.
And I just want to hold my notebook over this anomaly section here as I move your chart. As we look into like the options action on the day in terms of open interest and the volume that we're seeing, how is it looking on the day?
Yeah, so this is the same type of chart, but this is a 6-month daily chart here. This is just highlighting, once again, the 6330 has been a key area for us as far as a resistance and a support area. Right now, it's trying to act as support. We're only about 5 points away from it, but we are holding the 20-day moving average, which is in blue. It's sitting at around 63.17 right now. I think it's very critical that we actually hold that going into the close. We don't want to continue to gyrate and close above it one day, the next day we close below, close above, close below, because once again, that shows you that there's a lack of momentum, lack of buyers that are really stepping into the market here. So I think that's actually very pivotal for us. And obviously, once again, we have that flag pattern. We are holding this upper trend line here that we've had since May or so. So we haven't seen that fully break down. That would be your next area of concern if you do lose the 20-day, that this would be the next area to kind of focus on. If we're looking at the options flow and going into the close, though, Marley, obviously, once again, started off very strong. I have these blue lines here. You can see that we're making lower highs throughout. And now we are pretty much about to test this next sequence here as we kind of flagged out, consolidate, and hopefully we're able to see some buyers. The negative gamma area where we see a significant amount of positioning to the dealer side, to the downside, that could create a little bit of problems, is actually still sitting at 63.30 at this point in time. So what do you want to see if you are a dealer? You have some exposure there. You want to actually start buying up futures in order to offset potentially some of the risk to the downside. If we do not, we see a breakdown, you're looking at 6,300. We've been talking about that. Any type of breakout to the upside here. I'm not sure if we're going to get to 63.60. If we do, there is a call wall that is there. But I think this would be a win. If we kind of get right in the middle there, 63.45, 63.50, that would be a win going into the close here today. It looks like we're trying to start it up. But the last thing I will say for today, what's very interesting, any type of uptick that we have seen, all of these upticks, lower volume, and then we're seeing people selling into those upticks on larger volume. So the conviction right now is still to the bears on an intraday basis. The breaking of this line is really going to change that trend.
Every time we do this segment in studio, I watch the S&P behind you, and we get higher and higher as you speak. So whatever we're doing is heading in the right direction.